Hey everybody, welcome back. This is day number 14 of our personal finance overhaul program. Today's topic, income taxes, the number one obstacle to you amassing any type of appreciable wealth in this country. So let's get started on understanding the totality of this message. You cannot give away up to 37% of your income plus highway taxes, gas taxes, sales taxes, estate taxes, and sin taxes, alcohol tax, tobacco tax. You can't give away all of your money and expect to have anything left over for yourself. So our job here is to help you understand the ways that you can minimize the amount of taxes that you can pay by looking at the way other people pay less taxes. Now, understand this. Everyone in America, rich or poor, we all play by the same rules. We get the same tax forms in the mail. Those tax forms have the same set of instructions. Everyone uses the same forms. What's different between rich people, I say that with air quotes, and everyone else is simply the way that they conduct their affairs to take advantage of different IRS provisions. So these things that people call tax loopholes, right? And those are usually words used by people that are bitter that they don't get to deduct things. Um, they exist to benefit everyone in society. Now remember, just as I used the example of capital gains, of your home mortgage, of retirement savings, the government uses the tax codes to either punish or reward certain behavior in society. The more that you give to society, the more you will be rewarded through the tax code. That means if you are a job creator, if you're starting a business, hiring other people, you will become eligible to take certain tax deductions. If you are a home buyer, as opposed to a renter, you will be given some provisions, such as deducting your mortgage interest. If you are providing housing to other people, you are now becoming a landlord. You are creating housing, taking the burden off of government to provide housing for other people. You will be rewarded. And of course, saving for your own retirement so that you are not dependent upon whatever state the Social Security insurance fund is going to be in when you go to retire is helping everyone. They want you to be prepared for retirement, and you will be rewarded by taking certain tax deductions. So understand that these loopholes exist, and they exist for a reason. So how do we start to master this? And my first piece of advice to you is to do your own taxes at least once, or go line by line with your paid tax preparer if taxes are something that confuse you. And the reason I want you to do this is to find out all those places where you either skipped or put in $0, because those are the areas where other people are taking advantage of these tax code benefits for themselves. I want you to make sure that anything that you qualify for, whether it's today or after you start rearranging your affairs, hopefully as a result of this video program. But as you start to arrange your affairs to take advantage of certain tax benefits, I want you to take every legitimate deduction that's available to you. This is not cheating on your taxes. I use the word legitimate. Keep good records. As you do anything related to a tax deduction or filing your taxes, remember, put it in that front folder that I told you to put into your file cabinet. Keep it so that you have all your paperwork handy when it's time to prepare your taxes in February, March, and April. And don't be afraid to take a deduction if you qualify for it, ever. That's just money you're giving away. And then, when you're done preparing your taxes, what's your condition? Are you getting a huge refund, or are you owing the government money? Now, a little bit of money coming back or paying a little bit of money is the sweet spot. But if you're getting a large tax refund or you're owing a large tax bill, you are not having the correct amount of money withheld from your paycheck to cover your tax liability. Or you are giving too much money to the government, and that is effectively letting them borrow your money all year long and not paying you any interest. They didn't even send you a bouquet of flowers to say thank you, right? You need to put that money back into your paycheck, and then you know what I'm going to call that money. That's free money. And what do we do with that? We pay down our consumer debt. We increase the amount that we're investing. We increase the amount that we're putting towards retirement or paying off our home mortgage. And we use that money to our advantage. It's not spend money. That's smart, free money. So adjust your W-2 withholdings to right size your tax liability at the end of the year. So as you complete those tax forms, right, plan for the future. What are all those places that I didn't qualify for something? And start to think about how you can. And this was going to require more reading, more research on your part to find out how to play the game so that you can pursue more profits, more gain, more personal financial wealth creation, and then along the way pay the least amount of taxes. Okay, so like number one, once you start to itemize your tax return, which you probably must be doing, should be doing, if you have a home mortgage and those high mortgage payments allow you to start deducting interest, don't forget about charitable contributions. Now, charity is not just handing money over, putting money in the poor box at church every Sunday. You can give away items from your house. You can get rid of all that stuff you haven't used in 6 months, the stuff you keep tripping over, clothes that that no longer fit, maybe not no longer in fashion. Give it all to a place like Salvation Army, Goodwill, AmVets, lots of other charitable organizations. Keep a record of what you've given away. Write it all down. Keep any receipt that they give you when you go to the drop-off location. Put that right in that front folder. Take fair market value deduction of everything you've given away. And I don't want you to forget about those of us, and many of us are out there and don't know this, who volunteer. If you are doing charitable work, if you are volunteering for Little League, if you're coaching, if you're volunteering for the Boy Scouts of America, you're volunteering for Girl Scouts, all that time that you spent driving back and forth, having to buy special uniforms, any gear that you buy on for yourself or for the youth, all of that becomes tax deductible. So keep track of all your mileage, keep track of anything you buy, keep track of any membership fees that you have to pay, and take advantage of this charitable deduction. Again, if it's a legitimate deduction, don't be afraid to touch it. The other option to unlocking tremendous amounts of deductions, and I'm going to speak more to the detail of this in just a second, is do you operate any part of your life as a home business? If not, maybe you should start. Okay, so if you're doing anything for a hobby that could possibly generate a profit, treat it as a business. Maybe your wife likes to make jewelry or crafts. Maybe you are willing to push a lawnmower for the neighbors down the street, or spread mulch around in the spring and rake the leaves in the fall. Anything that you can do service-wise can be done as a business. Now, I am not saying quit your job tomorrow and try a new venture. Lots of businesses start in people's garages or basements or a home office, which for most people is their kitchen or dining room table. And they are a business. They qualify you for legitimate business-related tax deductions. I'm going to show you some of those in a little bit. But there is a one powerful thing I do want to emphasize in this strategy is the ability to take the things that you are paying for already and make them a legitimate business deduction, which makes them tax deductible. I'll talk about that in just a second. Okay, and also preparing for the future, always be planning for retirement. But note that at the end of the year, when you're doing that tax refund or payment, your numbers can change if you take money out of your left pocket and put it into your right pocket. Take the money you have in savings and apply more of it to a tax deferred IRA or retirement plan, and you can lower your income by that amount, thus lowering your tax. So if you're owing a lot of money at the end of the year, it's probably a good time, if you have the cash on hand, to make a sizable donation to your own retirement. You have up until April 15th of this year to make a contribution retroactively for last year. So it's not too late. If you haven't been saving money and you're listening to this video around the beginning of a new year, you still have until April 15th to make a deduction or get a deduction by making a contribution. Okay, and of course, if there's any type of home efficiency energy credits you can qualify for. Very popular nowadays is putting solar panels on your roof. I don't know anyone who's ever done it and uh, regretted it. I know people that have completely eliminated their electric bills because their house faces the right way. I know some people that have solar panels on both sides of their roof, not just the side of the roof that shines the most towards the sun. Very, very um, energy smart and financially smart. But take those credits. Replace your light bulbs with LEDs. Little things like that. The next time an appliance breaks, your refrigerator, your water heater, your furnace, make sure you replace it with an energy efficient model and see if the government will help cover the cost of some of that. Put in a Nest electronic smart learning thermostat, and you can get, by some places, up to an immediate $75 deduction or rebate, um, plus your tax deductions for energy efficiency. So don't be afraid to look for these little gems because they're out there. Okay, so here's what I want you to do. You have to start thinking like rich people. Stop asking your friends what they think if your friends are not better off than you, right? Who would ever seek advice from people who are in the same situation as themselves, right? What advice do you think you're going to get when you ask a person living paycheck to paycheck for financial advice? You're going to get crap because they are living paycheck to paycheck too. So you need to emulate the rich. You need to do what other people are doing. So the formula for creating wealth is very simple. Thousands and thousands of people have been doing it for generations. All you need to do is do what they have done. Walk in their shoes, right? So here's my advice. Okay, when you want to be focused on your finances and a healthy financial future, start early. If it's not too late for you, make a change, or at least give good advice to your children. In that, pick a career that pays. Okay? Do something that people are actually going to pay you for. It doesn't require a college degree. It's 2021, and I'm making this video. There is a massive demand for the trades. Plumber, electrician, welder, machinist, auto mechanic. Lots and lots of very, very good paying careers do not require you to put 4 or 5 years into a college education. College educations can be very good if the fields are right. But let me tell you, we've had enough sociologists, philosophers, and physical fitness technicians in the world, right? There are no 40 and 50-year-old people acting as personal trainers. It's certainly not a career path. It's something that you might like when you're an 18-year-old young buck full of testosterone, but that's not really a career path. So Choose your careers wisely so that you're positioned for success. When you start to invest, I want you to invest early and regularly. Again, teach your kids the value of investing early so that you can get those phenomenal compounding interest gains over time. Remember that calculator I showed you the other day about your mortgage interest? And you could see how much interest you're paying over the course of a 30-year mortgage? Flip that paradigm around. Look at all the interest you could be earning if you were the one investing instead of the one paying the interest. Okay. Now, also as a business people leverage other people to magnify their earning potential. What does that mean? It means they're hiring people to make them more money, right? If you start a lawn cutting business, you are limited by the number of lawns that you personally can cut on any given day. But if you hire somebody to cut additional lawns and you pay them a portion of that job and you keep a portion of that job, you've now expanded and amplified your earning potential. And if you can do 6 lawns a day with 2 people, then you can do 9 lawns a day with 3, right? Et cetera, et cetera. Business people leverage the talents and skills of others to help themselves make more money, right? Remember, if you operate as a business, this is very important. This is obviously I can't give you a whole business lecture in this short video, but understand that when you start operating as a business, you will be given 3 out of 5 years before you have to show a profit. And there's lots of losses that appear on paper that you look like you're losing money, but you're not. And I'll show that to you in just a little bit. But don't be afraid. Don't think that you have to show profits right away or that you lose your tax deductions. Make a genuine pursuit of earning profit. Take the deductions for every year it's possible. And if your business never turns out to be actually profitable, simply close your business and maybe try a new one. And you can continue to do this lawfully as long as your intention is the pursuit of profit. If you do these things and you start bragging to your friends that you're doing this to not pay taxes, that actually becomes tax evasion. And that is not legal. But the legitimate pursuit of profit makes your business activity totally legit. And you should take the deductions for that. And of course, as always, invest in real estate either as a homeowner or as a landlord or a developer, as your finances allow you to do that. Okay, arrange your affairs so that you can leverage every initiative that legitimately qualifies you to earn more and pay less. So here's the discussion that I told you we were going to have. I promise this will be brief. You have to understand the difference between earning a paycheck and business income. We talked about this earlier. When you earn a paycheck, here's what happens. You have earned income, and then your company deducts the maximum amount of income tax for a person in your pay bracket, and then you get to live on the little bit that's left over. That's how you pay for your cell phones and your car payment, your house payment, your internet, your tools, everything. You have to live on what is left over after the government gets their fair share. But as a business owner, you will earn income just like before, but now it's business income. And then your cell phone, your computer, the internet, the things you were going to pay for anyway, now used legitimately in your business, makes them tax deductible. You deduct that on paper, you're losing money. In reality, it's the exact same amount of money that you were spending before, but now they show up as legitimate business expenses. And then on the money that's left over, after you deduct all of your legitimate deductions, then you pay taxes on what's left over. So you're still paying taxes to the government, even if you pay at the same rate as a sole proprietor versus a regular individual. You will be paying tax on a smaller number after your legitimate deductions. This is a very high-level glimpse into the power of not earning a paycheck. Okay, here is our day 14 to-do list. Understanding your income taxes, I want you to prepare all year long for tax time. That means keep all of the receipts in that front folder of your file cabinet. That means arranging your affairs so that you are able to take legitimate tax deductions for things that you did not know were tax deductible before. Work closely with your tax preparer. Look over your forms and find all the places that you can change your behavior and make yourself qualified to take certain tax deductions. Make a year-end contribution to a tax-deferred IRA if you're looking to lower your taxes. Lower that income through a IRA contribution, thus lowering your total tax. And then if you're interested on anything business related or anything else that we've ever talked about in this video series, keep reading, watching, talking, learning about ways that you can take small business ideas, bring them into reality, and leverage the power of earning business income and using business tax deductions in the pursuit of profit that you otherwise didn't know about when you were just a paycheck earner. Okay, you got to execute now. There will be no changes to your life and your situation unless you take corrective action. Talk to you tomorrow.